Convert 401k to physical gold. Rather than keeping your retirement savings in stocks, bonds, and mutual funds that fluctuate based on the whims of the market, you may want to consider physically holding gold in your hands as your retirement asset of choice. While there are many ways to convert 401k to gold, here are some simple steps to help you start thinking about the value of gold as an investment vehicle. If you are looking to invest in gold, the first thing you need to do is convert your traditional 401k to physical gold, allowing you to invest in physical gold bullion and coins. Before you do that, you should make sure you know about the fees associated with this processing. If it's beneficial to your financial situation as well as how much it costs to convert from one type of retirement account to another. Here we go into detail about what steps must be taken and what is required in order to convert your 401k plan into a gold IRA. A gold IRA is a type of individual retirement account, IRA, that allows you to invest in physical gold. This can give you valuable, tangible assets that aren't at risk from traditional investment instruments, like stocks and bonds. Additionally, there are several advantages to holding an IRA over a regular brokerage account. For one thing, with certain IRAs, like a self-directed or real estate IRA, you have more flexibility when it comes to where you put your money. For example, if you have investments that fall outside of conventional IRAs, think Bitcoin. These alternative funds can be held inside a self-directed IRA. Another benefit of self-directed IRAs is tax-deferred status. When your deposit grows, you don't pay taxes on its profits until you withdraw them. Most importantly, though, self-directed IRAs come with fewer restrictions than other accounts do. You don't have to hold specific investments in order to use them. Instead, you can choose between hundreds of options as long as they fall within IRS guidelines for IRAs. This gives you more flexibility and control over how you manage your money. Why would someone convert their 401k to gold? One of the biggest obstacles for many investors is being able to purchase precious metals. Purchasing physical gold and silver can be difficult for some, since it isn't something that is always easy to buy with cash. Investors may have a 401k or other retirement plan from their employer that they want to convert into gold, but are unsure of how. Here are some reasons why investors might want to consider converting their retirement accounts into physical precious metals, and how they can do so. The process is relatively simple and only takes a few steps. Converting retirement accounts into physical precious metals can be done in one of two ways. 1. Purchasing physical bullion with cash, or 2. Rolling over your current account into a new self-directed IRA that allows you to buy metals. How do I convert a traditional IRA to a gold IRA? The conversion process begins by creating an account with a custodian, the organization that will keep tabs on all of your assets, for each type of IRA, traditional and Roth. From there, it gets a little complicated. After opening both accounts, in person or online, contact your current custodian and request that they move all funds from your traditional IRA into Roth IRA account. Once you've done so, you'll have one Roth IRA, and you're ready to convert. But before doing so, make sure your gold IRAs meet IRS requirements for alternative investments in self-directed IRAs. If they don't, you can no longer use them as such. For example, in order to invest in gold through a self-directed IRA account, you must choose between a precious metals custodial account or a precious metals master trust. If you choose a precious metals custodial account, your gold must be stored by a third-party custodian. If you choose a precious metals master trust, however, you must deposit your gold directly. That said, self-directed IRAs allow for flexibility in their implementation. As long as your IRA meets IRS requirements and is maintained by an approved custodian, it can hold whatever assets you'd like. Should I convert my 401k to physical gold? Every person has their own needs and circumstances. The only way you can decide whether or not a gold IRA is right for you is by doing your homework. If you think you'd benefit from having a gold IRA, then it's up to you to do some research. Read up on several different IRA providers offering gold IRAs. Compare fees, features, asset allocation services, bullion storage options, etc. Only after you've done your due diligence should you make any sort of financial decision, like converting your traditional 401k to a gold IRA. And if you choose to go through with it, make sure that all of your assets are in one place. Otherwise, there could be significant tax consequences when converting a traditional 401k plan to a gold IRA. The decision of whether or not you should convert your traditional 401k plan into a gold IRA largely depends on your situation. For example, if you have multiple retirement accounts already, like a traditional IRA and/or a Roth IRA, then converting would only mean duplicating your assets rather than consolidating them. If, however, you don't currently have any other retirement plans in place, then converting might be for you. Of course, before making any sort of financial decision, it's important that you do some research. Compare fees and features with several different providers. Read up on how it all works. There are many factors at play when deciding what kind of retirement plan will work best for you. The bottom line is that no one has all the answers. You need to look out for yourself and make decisions based off your own unique needs and circumstances. There are some tax savings benefits that come with converting a traditional 401k plan into a gold IRA, and depending on your situation, it could be worth doing. Plus, if you plan on leaving your current employer in the near future, there's also a chance you can save money when it comes time to withdraw from your retirement fund, which is why many people consider converting their traditional 401k plans into gold IRAs. And while converting is possible at any point, keep in mind that once you go through with it, there's no going back. So do yourself a favor and do your homework before making any sort of financial decision like converting your traditional 401k plan into a gold IRA. How do I convert my 401k to gold? If you have a 401k, or any other sort of tax-deferred retirement account, with a big balance, you're probably not looking forward to paying taxes on it when you take it out. There is a better way, however. Convert your savings into gold. The beauty of precious metals is that they retain their value, and hold onto it even better than stocks and bonds during times of market volatility. The process is fairly simple, though you'll need a bit of paperwork and help from your accountant. First, establish an LLC, if you don't already have one. Then, get in touch with one of our recommended providers, who will set up shop as a qualified purchaser. That way they can purchase precious metals on your behalf. If that sounds complicated, don't worry. It will all be taken care of for you by the provider. Talk to them today about converting your 401k into physical gold. Is converting my 401k safe? When most people want to convert their traditional 401k plan into a gold IRA, they wonder if it is safe. There are two main issues that come up when thinking about how risky it is to convert a 401k into an IRA: gold market risk and investor risk. Each of these can affect how risky converting your traditional 401k into a gold IRA is. The gold market risk refers to how risky it is for you, as an investor in general, to invest in gold. The risks involved with converting a traditional 401k into a gold IRA depend on who you convert it with. Overall, we would rate converting a traditional 401k into a gold IRA pretty low on our list of risky investments. Conventional wisdom would say that any investment worth making should have some level of risk associated with it, so depending on your situation, investing in rare metals may or may not be right for you. Let's break down each element so you can decide if converting a traditional 401k into a gold IRA is right for you and your retirement plan. But first things first. Let's define exactly what a gold IRA is. A gold IRA refers to an individual retirement account, IRA, where investments are denominated in precious metals such as gold bullion, silver bullion, platinum coins and bars instead of US dollars. How to move a 401k to gold without penalty. If you're looking to protect your future finances in the event of an economic crisis, it might be time to consider investing some of your money in gold. While 401k plans aren't normally allowed to be invested in gold, there are ways to move your 401k into gold without incurring fees or major penalties. Here's how to get started and what you need to know about moving your 401k into gold and other precious metals, with or without penalty. Moving 401k to gold without penalty rules and requirements. Depending on your plan, you may be able to move some or all of your 401k balance into gold. In general, however, you can only do so if you're 55 years or older and are moving it into an individual retirement account, IRA. If that's what you want to do, be sure that you have about 30% of your current 401k balance in cash in order to avoid penalty fees. It's not mandatory but highly recommended. Depending on your age, you may also have other options for investing in gold. For example, if you're 45 or older, you can invest up to $100,000 in a self-directed individual retirement account, IRA, and buy up to 25 ounces of gold bullion. 1 ounce equals 31.1 grams. You can also set up an IRA charitable rollover account, CROA, and donate cash in order to open it. When you do, you can use your gold in order to make your donation. If you're younger than 45 and want to invest more than $5,000 in a retirement account, be sure that you have an individual retirement account, IRA, and not a 401k. IRA accounts also have fewer restrictions and penalties. If you're younger than 50, you can withdraw your money at any time. After age 59 and a half, you can withdraw funds penalty-free as well. But if you're younger than 59 and a half and want to move your 401k balance into an IRA anyway, be sure that it has no loans outstanding. Otherwise, they may turn into taxable distributions rather than retirement distributions. How do I convert my 401k? If you've decided that converting a traditional 401k into physical gold may be right for you, it's time to get started. You will have some important decisions to make in order to make sure that your conversion goes smoothly. Are you still wondering if converting a traditional 401k into a gold IRA is right for you? You can rest assured that investing in gold through your IRA is safe, because when you convert your 401k into a gold IRA with one of our recommended providers, they will handle all of these steps for you. Confirm you have enough funds in your traditional 401k. Contact your 401k plan administrator to confirm you have enough funds in your traditional 401k for a gold IRA rollover. If there are not enough funds available in your traditional 401k, you can roll over other eligible retirement plans or IRAs into your existing traditional IRA, from which you can then make a rollover contribution into a new or existing self-directed IRA and then roll it over into a new or existing gold IRA. This process is commonly referred to as an IRA structure check or IRA conversion. Determine which self-directed IRA would be best for you. There are a variety of choices when deciding how to fund your new self-directed IRA, such as bank and credit union IRAs, white label IRAs, exempt market IRAs, brokerage IRAs, self-directed Roth IRAs and other individual retirement account IRA products available depending on your state. In order to determine which type of self-directed IRA is right for you, take some time to learn about each option so that you will have a thorough understanding before making a decision. You can review our list of resources in order to get started today. Open your new account or rollover your old one. If you have decided that one type of account is right for you, or if it is time to open an account with another institution, then visit our page on how to open a new self-directed IRA. Process through self-directed broker, advisor. When it comes time to convert your traditional 401k into a gold-based IRA, it's important that you select a custodian who will work with you directly. Self-directed IRAs are typically brokerage accounts where you can buy and sell investments like stocks, bonds, and mutual funds. The IRS has strict guidelines on how much money can be converted from your traditional 401k plan into precious metals. The IRS requires that you convert funds from your traditional 401k plan into precious metals by rolling over funds directly from your original retirement account. You can roll these funds into a self-directed IRA at a gold IRA custodian, such as Augusta Precious Metals or Goldco Precious Metals. There are several different precious metals available to invest in, including gold and silver bullion coins and bars, or even gold certificates with numismatic value. Augusta Precious Metals and Goldco Precious Metals offer a variety of gold-based IRAs, depending on what you want to invest in. Once you have opened your account, you can start investing in gold by rolling over funds from your traditional 401k into an IRA that is invested in precious metals. Funds will take 10 to 14 days to transfer over. If you want to invest in gold, first you need a place to store it. A traditional savings account won't do. You can take advantage of your tax-deferred and tax-free assets by transferring your funds over from a traditional 401k plan into a precious metals IRA. This is one of many reasons it is imperative that you begin investing in precious metals as soon as possible. Interest rates are at an all-time low and will only rise over time. So convert your 401k now before it's too late. In order to qualify for a precious metals IRA or self-directed IRA, though, you must be allowed to withdraw amounts from your existing retirement plans. To see if you have that ability, contact your plan administrator today. Also consider consulting with a financial advisor who specializes in IRAs. They may also be able to offer insight on other ways to diversify with commodities such as silver bullion coins and small bars made of pure silver or gold. You can work with your IRA custodian of choice to choose an option that best fits your needs. But don't wait too long. Time is on your side if you have a retirement plan that offers more assets, but less time. It may be too late in a few years if you leave it up to chance. Or consider rolling over your existing account into another type of precious metals IRA account, one backed by physical gold and silver bullion rather than shares, futures or options contracts. A self-directed precious metals IRA will offer many more investment opportunities, not just for stocks and bonds, but for other types of physical gold and silver investments such as coins and small bars. Plus, you'll still benefit from tax-deferred growth like before. So what are you waiting for? Whether you want a gold IRA or a self-directed precious metals IRA to protect yourself against currency fluctuations, inflation or potential market collapse, now is a great time to get started. What type of investment structure is the best for me? You should consider using a self-directed IRA or solo 401k as an investment structure for your new retirement plan, especially if you are eligible. Self-directed IRAs and solo 401ks allow you to buy real estate, precious metals and even stocks with pre-tax dollars. Most traditional retirement plans do not offer such a wide range of investment options. These types of investments can help you maximize your profits while minimizing taxes. The type of investment structure you choose will depend on your circumstances and your goals. For example, if you are a business owner looking for tax savings and diversification, a self-directed IRA or solo 401k may be best for you. On the other hand, if you prefer more hands-on control over your investments, a custodial IRA may be more appropriate. Where can I find an insured and reputable company to buy my gold from? If you want to convert your current 401k into actual physical gold, finding a reputable and insured company is key. To find a legitimate provider of physical gold and silver, seek out companies that are members of industry organizations such as London Bullion Market Association, LBMA, or the World Gold Council, WGC. These organizations maintain standards for dealing in precious metals, and their members must meet certain requirements before joining. You should also do your due diligence in researching companies that claim to provide precious metals. For example, their websites should be secure with HTTPS encryption and a valid certificate, and they should have verifiable contact information available for you or for consumer protection bureaus such as the Better Business Bureau. How can I easily sell my investments in my 401k? A question that many investors have is whether or not they can easily sell their investments in their 401k plan. The answer depends on a number of factors, but one thing most financial advisors agree on is that you should avoid selling your investments whenever possible. To learn more about how and when you can sell these investments, keep watching. One reason for not selling is that you would have to pay capital gains taxes on any profits. For example, if you purchased a stock in your 401k at $20 per share and it's now worth $200 per share, you'd owe capital gains taxes on that $180 of profit if you sold it today. It's also important to remember that your contributions are usually made on a pre-tax basis, which means that you don't pay taxes until you withdraw them. While you can take money out at any time, if you do so before age 59 and a half, you would have to pay ordinary income taxes on your withdrawals and an additional 10% early withdrawal penalty in most cases. Finally, in addition to paying taxes and penalties on any profits you make from selling your investments, you could end up reducing your account balance if you sell a winning investment just before a major dip in the market. For example, if you need money from your 401k today but sell a stock that's been rising for years before it takes an inevitable turn down, your account balance could take a major